in the markets with the S&P futures down about 60 points to start the day. That's our version of markets in turmoil. Thank you, Ryan, for that. A lot of people crying, a lot of people whining. Ramsay Rippers isn't even on the screen. Brother, we're live. All right. Let's introduce the panel. Starting with Money Mander. Good morning.
Good morning. Happy Wednesday. Great day to have a day.
All right. Diamond Trades.
What's going on, guys? Market's definitely in turmoil right now. We'll talk about it.
All right. Moe Mamba.
Good morning, Hondo. Nothing can ruin my day. You can't ruin my day. King Cap can't ruin my day. Only thing that could ruin my day is if they pump CS pre-market now before the bell. If they pump this shit, that's the only thing that can ruin my day. Otherwise, man, it's going to be a great, great day. Let's get it.
So you're in puts, right?
Of course, brother. Always. Always.
And what is going on with CS right now in the pre-market? I haven't looked.
Down about 30%.
Woo-hoo-hoo-hoo.
Yes, sir.
Holy shit, Mo. You're about to wake up to a check.
Yes, sir.
Good morning. All right.
Good morning.
Who am I missing here? Ramsay Rippers or Stock Snipa?
Back and forth. Who we got? Good morning, guys. Let's get after it. Let's have a good day.
What's up, guys? I'm Ramsay.
All right, Snipes. Let's get right into Fed forecast, economic calendar. What's on the slate for today?
Yeah, let's go ahead and start with the economic calendar for today. So we had PPI retail sales and New York manufacturing index all come in this morning. Retail sales came in. I'm sorry, I left my screen. We had PPI coming this morning at minus 0.1% versus 0.3% expected, which is actually a pretty good print. Retail sales minus 0.4% versus 0.3% expected. New York manufacturing index, which is the one that caught my eye, minus 24.6 versus minus 8 expected. So definitely a sharper drop off than anticipated in the manufacturing index. We could talk about that a little bit later. We still have any NAHB housing market index at 10 o'clock today. The real estate market has had an awful start to 2023, so we'll have to see how that housing data comes out tomorrow. We have jobless claims and more housing data, so keep an eye on that. And then on Friday, we have UMich consumer sentiment, consumer confidence. So a decent amount of data still to come this week. So we will see. But obviously, we got the big one out of the way yesterday. So let's talk about it. We got CPI came in yesterday. Headline CPI year over year came in at 6%, basically in line with expectations and below that 6.4% print that we got for the month of January. We had core CPI coming at 5.5%, which is also in line with expectations, down from that 5.6% print that we got in January as well. On a month-over-month basis, headline came in at 0.4%, just in line with expectations, and core came in at 0.5% month-over-month, also in line with expectations, but still the largest monthly gain in the last 5 months. I believe that Mander will touch on that a little bit more. Let's dive a little bit deeper into what parts of the economy were actually showing some serious pressure in terms of price increases. Shelter costs rose 0.8%, which matches the largest monthly gain that we've had since 1980. So the largest monthly gain in about 40 years for shelter costs. Inflation has continued to come down on a year-over-year basis, which has led many to beg the question, why is the Fed still need to stay so aggressive, particularly with some of the things that we're seeing along in the financial sector, right? We're seeing a bit of weakness, obviously, with the SVB, SBNY situation over the weekend. And then now this morning, Credit Suisse hitting the gulag down 30%. Why do they need to be so aggressive, right? When you take into account that certain parts of the economy, like services, like housing, continue to see these price increases, and then you compare the current rate of inflation, we just got this 6% read with the pre-pandemic levels, which were in that range of like just above 2%. You can understand why the Fed is sort of still moving with this aggression, right? Inflation is still elevated, albeit coming down, but you do still have parts of the economy where it's not even coming down. It's actually still on the rise. And so I think that's really what's leading into the Fed's thinking about raising rates. On a month-over-month basis, inflation remains more elevated than many had forecasted coming into 2023. And suddenly, Powell's comments about this being a long and arduous battle against inflation starts to really make sense, right? When you see exactly how tough it's going to be. It seems like we were making a lot of headway early on, right? When we were going from like 9%, like 8.5%, 8%, like we were moving down pretty substantially. We're still on the way down, but it's in smaller increments now, right? We've started to move a little bit slower as things have stagnated. One of the silver linings from the data yesterday is that wage growth actually came in below expectations. So while we saw that strength in the labor market in January, that didn't necessarily translate into high wage inflation in February. We'll see if that continues to hold up into March and April, but that is one silver lining. Those wage increases were a concern after we added 500,000 jobs in January. People thought that was going to, add some upward pressure to inflation, and it doesn't seem like it has done so yet. So we'll keep an eye there going forward. Mander, what do you think about yesterday's numbers?
Yeah, I'd agree. I think you did a great job covering it. The wage inflation was the biggest thing I was watching because, like you said, after adding 800,000 jobs year to date so far between the two NFPs, that was the one thing I wanted to watch. So I think that was actually good seeing that cool off. And the one thing I wanted to cover today, on top of Fed funds futures, because they're nuts right now, they're trading like 0 DTEs with volatility recently. I wanted to cover why the Fed targets 2% because right now, even coming down to 6%, that's still triple their target rate, right? So where did 2% come from? Was it some analytical number that the Fed studied with models, discovered that to be the most efficient? In short, no. Really, the idea of 2% came simply because the Fed thought it was high enough that the economy wouldn't risk deflationary environments with low growth and high unemployment, but not so high that you have the purchasing power losses that we're seeing right now with the wage growth spirals. And so that's why I think that wage growth decrease in inflation was actually really, really significant. Because when you start to see these levels of high inflation, that is your biggest worry is people are saying things are going to be more expensive a year from now, significantly more expensive. I need to get paid more. And that's where you see these wage growth spirals that obviously hinder the companies that have to pay them. But when we're thinking prices are decreasing, consumers are going to spend less in a deflationary environment because if something's going to be cheaper tomorrow, why would you buy it today, right? So when you get into deflationary environments, that is the problem. And then companies will lay off employees, reinvest less, amid fears of decreasing revenue. So really between the two, you have to target positive inflation to help the economy grow, but not so positive where, even right now we're at triple their target rate at 6%. So that's really where the 2% target comes from. Really, it was just a middle ground between positive growth of inflation over time and then giving the leeway to still be able to lower rates and catalyze economic growth in times of deflation. Because if they targeted like 0.5%, what do you do when things get negative and you have rates at or near zero already, besides going to quantitative easing, which they really do anyway, but I'll save that for another day. So right now, the Fed has only publicly targeted that 2% number since 2012. So I think it's kind of unknown right now how well that attempt to publicly anchor the ship is working. Because the thought was if you tell people where they're looking to put inflation and you give them a number, then the public knows exactly how to expect expenses to grow over the future. And producers know how to accurately price their goods, right? And how much do they see the input goods appreciating over time? So that was the one thing I wanted to cover. I think it's really interesting because the Fed has been asked about double-digit times now, would they ever consider raising that target rate? Like, where did 2% even come from? That's really where it's come from. And the Fed so far has not said they have any ambition of raising that from 2%. So I think the Fed's in a really tough boat now, especially as we see Credit Suisse this morning, right? What are you going to do? Are you going to continue to target 2% and try to get price stability down that low, but then risk a financial landslide here in the banking sector? I don't know. Market's really in turmoil here. Couldn't have said it any better.
We should keep a running counter of how many times Ryan throws that up on the screen today. I think that we're at 2.
This morning, the markets were pricing now a 50% chance of a pause. We just went from 80% of 50 basis points last Thursday. Yeah, the Fed fund futures thing is actually kind of nuts. We'll cover that in depth on Friday, actually, because that's a wild story in and of its own. But we'll wrap it up. Back to Alejandro.
All right. Awesome job, fellas. Thank you very much. Now to quickly cover the system, take a look at what we got headed into today. So the main focus is going to continue to be the 50th SMA on the 1 hour chart. Yesterday, we got a brief break over the 50th SMA on the 30-minute chart, and it did look for a minute like things were starting to get a little bit bullish, but we had several reasons why the bulls could not hold. We know that the angle and slope of the moving averages is extremely important, as that is our visual representation of momentum in the market. So although we got a break over the 50 SMA, it still remains in a super strong downtrend, okay? Both the charts were not telling the same story. Again, we like to see the charts telling the same story when we flip our short-term bias from bear to bull and vice versa. We never broke over the 50 SMA on the 1 hour chart. And then, of course, we had several areas of resistance up here, 39.30, 39.40. 39.40 SPX is a 200-day moving average, which is just about where we topped out, 39.38. And there's also a supply area if you take a look at any of the higher time frame charts. So now going into today, the market is obviously selling off, down about 65 points in the S&P futures. Before the start of the regular trading session, the cash session here this morning. So we're going to get that gap down. Tricky to trade. It's going to be about identifying your levels, trying to play level to level. As far as the system, we're going to already start moving into oversold territory. We're going to be about halfway there. Let's see where we open, right? We still have some time. So shorting, making sure that we're clearing levels of support, not just shorting blindly because, we gap down and things look weak and Credit Suisse this. And remember, trading in the volatility that we've had for most of March, what's really going to help us to stay alive is creating a plan, following that plan. And that's going to help us from over trading and trying to chase every move because we know it's impossible to catch every move, okay? But right now, the bears remain in control as long as they're trading below the 50 SMA on the 1 hour chart. Pretty simple story being told there. And I expect the market to provide some good opportunities to trade once again today. All right, guys. Now over to Ramsay Rippers for Bet the Bell. For the system, I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Beautiful. Bring in the stats. Everyone's doing pretty well this month. Mo got another win. It doesn't look like it's completely updated. I believe Snipa's at 14-12, according to the chart of what I'm looking at on my my stat sheet. But everyone's doing pretty well. Any complaints? Anything for the people to say?
Snipes actually the other day told me that I pay you. It was either Snipes or Honda. One of them said that I pay you to fudge the stats on Bet the Bell.
If anything, Ryan's fuzzing the stats because Snipe, I'm looking at it right now. He has 14 wins and 12 L's. So
pretty serious allegations, but
that is a very serious allegation. So let's get right into it. Green or red. Market just made another low in the pre-market. I don't even know if it's really worth asking this question, but we might as well go for it. Diamond, what do you got? Down 2% here.
Gotta go red. Gotta go red. ChatGPT said so.
Mander.
Yeah, I'll take the free win here. I'm going to say red as well.
Hondo.
I'm going red.
Mo and then Snipe.
ChatGPT Day, baby, March 15. Y'all remember that? It's a holiday starting next year. Red.
Snipe.
I'm going to take a wild guess and say red.
All right, wild guess. There you go. Let's get into our next question. Ryan, pull up the chart. We haven't really spoke about crypto in quite some time, let alone Bitcoin. As you can tell and see the chart, we broke over 25K, new highs of this previous range that we've been trading in off of lows. What I want to know is what comes first. Are we going to reclaim that $30,000 level or retest 20K first? Obviously, this is a weekly chart. Warranted. We did tap 20. I mean, we basically ripped 25% over the last week on Bitcoin. We're about equidistant from that $30,000 level, which we haven't retested since the big default, should I say, or massive letdown back in June of 2022, last summer when Bitcoin was margin calling all these crypto funds. What do you guys think? Let's start with Diamond.
I will go with 20K first. I think that the conditions have to be a little bit better for Bitcoin at 30K. Better than what we're seeing right now. Things look pretty shitty.
Fair. Hondo.
I'm gonna go with 30K. Take a flyer here. My thinking is if the Fed pauses after the March meeting, and there's any whispers of cuts later in the year, maybe we see risk on start to go again a little bit. And Bitcoin has actually been leading the S&P. If you guys have been noticing, Bitcoin has been seeing some squeezes as of late. So
Crazy squeezes over the last five, 6 sessions. Snipe.
Yeah, I'm gonna have to pick 20K. I think that crypto will get hacked or something will happen before we could get to 30K, like always. But yeah, something's gonna happen.
Mander and then Moe.
I'm going to take 20K, but this move actually really surprised me. So it's really getting that squeeze off of the financial crisis we got going on here in the SVB thing. As people are looking where to put cash, obviously I think the treasuries getting bought up made a lot of sense, but I didn't see people putting money in the risk on crypto space. But evidently people feel confident holding Bitcoin. So that's what this big pecker candle is. I'm going to take 20K though.
Last but not least, Mamba.
Yeah, I was also surprised along with Mander here. I did think we would come down at least test 90K. We didn't quite get there. And then you had this rally. This is the third time we're testing this daily supply. I'm going to go with, well, 30K is tough. I'm going to say 29 because I do have resistance at 28.6. That's a daily resistance. You might get a wick to 30, but I'm going to go, with more upside here. If we get through this 25K, straight shot there. But I do think we see that 28 to 30K range first. Before pulling back. Though I do hope we do come down to 20K. I do hope so.
The bear, the biggest bear of them all. Some may say bigger than the Mander, Moe Mamba. All right. And last but not least, we're going to close off the day with Moe's holiday, our last question of the day. ChatGPT, we spoke a little bit about this a few weeks ago, how they predicted that the market's going to crash on March 15th. Today is the day. Today is Judgment Day, and SPY is down 7 points in the pre-market. We still got plenty of time to go for a market to crash. But what do you guys say? Market's in turmoil. Does the market crash today? Rogue question, just wild question. Diamond, what do you got? Is ChatGPT going to prevail and be correct when the bell rings today?
So I am hoping not. And it's not necessarily like a financial sort of reason. Like market coming down really wouldn't bother me all that much. Just buy at lower prices, XYZ. But for them to get it right like a month and a half in advance would just it would freak me out personally, and it would put me in that okay, robots are taking over sort of mindset. So I'm really hoping that they're not right about this.
I'm really hoping. I completely agree with you.
Yeah.
Snipe.
Yeah, I gotta agree with Diamond. If ChatGPT is right and hits the nail on the head, ChatGPT controls the market. Am I right?
I mean, literally.
Mander.
So what are we qualifying as a crash? Like a limit down?
That's my question. That's my question.
So what are we gonna? So if the market goes down 7%, what we get paused for 15 minutes?
Well, yeah. If a limit down happens, that's a crash for sure. I was gonna say I think a 4% down day probably is pretty significant, and we're already halfway there. So I don't know. We'll see. Kind of sketchy stuff here.
I will say this is. I mean, we're kind of. It looks like we're gonna open up just about where we should have closed yesterday, and we still got a couple more points after that crazy rip. But I don't really know if it was warranted or not.
What does that mean? Where we should have closed?
I mean, dude, we ripped 50 points into the close yesterday out of nowhere.
Yeah.
What do we got here? Hondo, what do you got?
Yeah, I'm definitely hoping that doesn't happen because that would really start to question everything ever. And I'd be a little hesitant to bring a child into this world, given the AI takeover. But yeah,
literally.
I guess I'm fucked, right?
Yeah,
I guess.
No going back.
yeah,
no.
Mo's got one on the way.
I got one on the way too. Yeah.
We'll end it with you, Mo.
So, our ChatGPT crash. Guess you hope so, right? If you're in shorts. But on a real note, I do think we'll come down a few more points. I don't think we'll have a circuit breaker. We'll come down a few more points. But hey, look, March is historically one of the worst performing months throughout the year, right? I've been looking at March for the past few years. It is one of the worst performing months. And not just that, I did give you guys a heads up, right? I mean, put flow was getting smacked, guys. Put flow in the millions. You're talking about 15 mil, 10 mil, 8 mil on random, across the board, large caps, mid caps, indices. So saw it coming, right? But we're down a few points here. I think we'll come down a few more points. Let's get into the analysis. Let's go ahead and do that.
Yeah, let's rip it. Let's go straight to Mo.
Go ahead here and share my screen. It's massive. They were just infamous trend line right here. All right, so few more points. We're at, right? 379. Remember this 379. This was the range back at the end of December that we hit on a few days ago, 2 days ago on pre-market, right? So 379, that lower range, end of December. I do think we'll come down and hit this. Remember what we had said. I want to test up to what? 393.5. This was on Monday. 393.5. Guess what we got? We got that test rejected, closed below it, right? Bearish setup. You want further downside. There you go. We got it here. PPI didn't do much, I guess, right now. I'm not sure. I'll have to look at where we're at on how futures reacted to that. But I do think now we pull back into this 379. This was the play all along, right? Come up into here. First, it was if we get through, we had a daily demand here. If we went through, I was targeting what? 386. We came up, we closed slightly below that, right? Slightly below that. And then I was looking for a move back into this 393.5, which was the top of that daily, what was once a daily demand, now a daily supply. Came up, hit it, rejected, closed below, and now I'm targeting a move down to 379. Now here, if we do come and close below this, I do expect this to come down to 370.6, but not, right away. Maybe you get a little break hook and then go, right? Flip that level into resistance here and then make your way down. But for now, the big level I'm watching is 379. I really do think we do hit it this week. Today, who knows, but I am targeting this level this week for sure, 379. And then how we react on this level, we'll see if we get a bounce, and we'll go about it though. Come BTV that day. That'll be it. Thanks, Hondo.
All right, awesome. Thank you, Mo. That's going to do it for this morning show, everybody. Thank you for joining us on Beat the Bell. We will be back live on Friday morning at 8:30 a.m. Eastern Time, and we'll be trading all day today in the Kane Capital Discord. You can go to kane-capital.com to trade with us. Have a great rest of your day, everybody. Trade smart, manage risk, get the job done, and we'll see you back here on Friday morning.